600 seconds, I'm going to provide you guys with a quick update on the financial markets, and we'll take a look at things like the euro dollar, Bitcoin, but also crude oil, gold, and DAX. Before we start though, I need to mention that trading financial markets is unfortunately risky. You can make money, but you can also lose money. And the number one reason why people lose money is just because they trade with just too much leverage. So bear that in mind before you start trading. Okay, good. Let's get going here, and we'll begin with the euro. So this is the euro, and the market has corrected a bit, which is fair. That's fine. A simple fib from this low here, which I see as the trend defining level at 122.07, all the way up to the high here, which is 125.40, shows that these are the three fibs where the price could bounce from if this is a genuine uptrend, which is obviously it is an uptrend, at least for now. And the idea is really that from 129.94 the market could bounce. We reached these levels here on the 28th as the market opened, and for now it looks to me at least that the market is trying to bottom out. So I'm going to remain bullish, and I am bullish above this level, and really anticipate that maybe not today, but hopefully today the market is probably going to bounce from these levels. If not, I'm going to go a little bit deeper, but then again, as long as it's about 122.07, I'm going to remain bullish. Here's the price of Bitcoin, and it's just doing what it's been doing lately, which is just trading sideways. The market obviously stopped declining, but it's not gaining. And the reason for this is that the market overall is creating these lower and lower and lower highs. And the last major interesting high right now is this level here from Saturday, January 20th. So that's 9 days ago. And that level is the $13,086 per coin level. Now take that out, and the market probably is gonna go up a bit, and then it's probably gonna go down some, and then maybe eventually just head to the upside, doing something like this. Something like this. So I do think that a break to this level will probably mark the end of this decline, and most likely we'll see this market head higher, but we need to break that level, and until we do that, there's a risk really that we breach the downside, which is 89.85, and then just continue to move to the downside. So for now, we'll just wait and observe until we have this break of this high. Here's the price of crude oil, and you might remember I said that on a break to this high, which is 64.89, the market may hit up and then down and then probably up again, right? And the first entry worked out great. You know, long here, one could book some profits at 66.50 or so, and then goes down again, buy again, and now again an opportunity to book profits. Now what I have done is that I think this market can head to the upside. So what I did here, I reduced the key level, so the stop level. So you have this low here, which is really the low that is quite important, but it's never good to be too close to all the price action. So I'm watching 64.31, which is this level down here, and this is my new key level. So yeah, the market might move down to 65.42, which is pretty much around this low, and I think traders will try to buy again, and then they will probably put the stop losses 64.31 just below here, which is another sort of cluster of support and resistance. So remain bullish. It's looking really good right now, and could easily just move to the upside, but if one is not long, then one needs to buy on a pullback. That's what I think traders are doing. Here's gold. You know, here as well, we did some very nice trades and setups over the last few weeks, and here there's no different to the euro, the pound, things like that. You take a fib from the last low, pull it all the way up to the last high, and you can see here that we corrected 50% of this market move. And we already said before the 25th, so probably on the 24th, something like that, on the morning of the 25th, that we could buy here. We saw a bit of a bounce, and then now back at it again. And I think here, of course, it could continue to decline a bit more, and it's too early to reduce the stop loss. But it doesn't change the overall outlook for this market, which is a bullish market. And on these dips, traders try to buy And of course, these market will reverse at one point. So we will give back some profits at the end of this move. That's just the way the market works. The idea is, of course, to maybe keep, I don't know, maybe 80% of whatever you made. It all kind of depends on how you're trading, but the idea is to not give everything back. And the other thing as well here is that we will have a loss at the end. But for now, it's a bullish trend, so I just want to keep on buying here. Here's the DAX. The DAX is bullish, but obviously struggling because of the situation with the euro. You can see that it's bullish because price created a low here on January 2nd, and then another low here on January 16th. And the idea for me was that the market was going to try to bottom out around these levels here, but it didn't actually manage to do so. It created a low much lower, and obviously it would have been better to buy down here. For now, I think this could continue just to head to the upside. The S&P 500 is extremely bullish, and many of the other stock markets across the world as well are bullish. So hopefully the idea is this, like, okay, the euro is gaining, and that's gonna hurt the possibility for these firms to compete on the international markets. However, though, maybe if the demand in Europe and for the rest of the world is strong enough, then even though the euro gains, the money that people are making now, maybe that is enough to compensate for the euro becoming more expensive, and thereby German exports becoming more expensive. If you're trading, there's no real change to the outlook. I'm bullish from these levels, and I'll be bullish as long as trade above 13,134. And that guy concludes the main part of this presentation, or the first part, which is a quick update on all these markets. And if you're new to this, you may be watching us on YouTube or maybe our Facebook channel, then don't forget that we do host these webinars Monday to Friday at the live training room. It's all free to join, and it's a good opportunity to know what's going on with the main markets. What else did I want to mention? Well, today, if we click on education and webinars, we will have a webinar. Here, we're going to cover the US inflation report. It's the favorite gauge of inflation that the Federal Reserve uses. So we're going to take a look at that, and there could potentially be some trading ideas on the back of that. If you do want to join, you just need to register. However, if you have registered in the past, then just click in up here to log in. So you log in with the username or the email and username or password, sorry, email and password that you created the first time, and then you just click on a button, so you don't have to actually fill this out. As well, if you did sign up for the live training webinar series over the last month or two, then you'll have access to all of these other events that we're hosting in this month as well. On Friday, as an example, we're going to cover the US non-farm payrolls, which should be quite straightforward because it's usually numbers are good, people buy, numbers are bad, people sell. So it's very straightforward and high impact event. And we're very lucky because on Friday, the week after, we have the Canadian non-farm payrolls. Again, very straightforward. Canadian market, labor market creates more jobs than expected. People buy the CAD. Worse off, they sell the CAD. And then we have similar numbers from the UK, which is the unemployment rate on February 21st. Now these numbers, again, relatively straightforward, but it's not as straightforward to trade because the market here pays attention to this, but not as much as they pay attention to these numbers up here. Lastly, tomorrow, yes, already tomorrow at 1500 hours London time, we're going to have an educational webinar called Forex, Top Forex Trading Chart Patterns. So we're going to take a look at some of the patterns that people use when trading. It's a good to watch if you have, say, less than 2 years experience and want to know how to derive profit targets and stop loss levels using basic chart patterns. As well, if you have maybe read this, because I read this, I guess 10 years ago, something like that almost. It's good to revisit this, refresh the skills, because it's helpful, especially in markets where price is just rallying and rallying, and we don't really have any potential good profit targets. How do we derive these? For example, in cryptos, the markets are just heading to the upside. But what happens when we break a sideways pattern, or what happens when we break out of a flag. How can we derive those profit targets? Things for those specific marks, this works really good. Okay guys, that's it. I want to thank you so much for joining me. Don't forget to like the video, and don't forget to share and retweet with anybody that you might think will be interested in trading. Have a good day. Thank you.